Snowflake is an extremely fast-growing software as a service company that is taking over the cloud data space. Whether it be data storage, data transport, data analytics, Snowflake can handle it. The stock has also declined over 30% over the last couple months, which may give us the opportunity to get into a deal on this one. Hey everyone, and welcome to FinTech. And in this video, I'm going to be reviewing Snowflake, going through their background as a company, looking at what they actually do and what they offer, and finally analyzing their most recent earnings reports. Lastly, stick around until the end of the video to see whether or not I personally decide to invest money into Snowflake. So make sure to hit the like button and get your free $30 from M1 Finance when you use the link in the description and deposit $100, and let's jump into it. Snowflake was founded in 2012, and it basically has your stereotypical Silicon Valley startup backstory. They were founded in San Mateo, California by 3 former data architects from Oracle. They then spent 2 years in stealth mode, building both venture funding as well as the revolutionary data warehousing product that would eventually launch to the public. Ultimately, they gained over $1.4 billion in venture backing, and they launched their product to the public in 2015. During their lifetime, they have had several CEOs, starting out with Mike Spicer, a venture capitalist, followed by Bob Muglia of Microsoft fame in 2014, and then finally followed up by Frank Slootman in 2019. It was Frank who brought up the idea of taking Snowflake public in 2019, although it didn't actually IPO until September of 2020. Now, because of all the hype surrounding cloud computing at that time, which you can see just by looking at my portfolio gains around that time, Snowflake's value doubled during its IPO, giving it a valuation of $70.4 billion, making it the largest software IPO of all time. Now, when that IPO happened, I was extremely interested in Snowflake's products at the time, but the ludicrous stock valuation they were being given at the time was just too high for me to convince myself to buy in. Luckily for us, that has changed recently, with the stock price dropping well over $150 from its 52-week high of $429. So why was the valuation so high? What makes Snowflake's products so special, and what do they even do? Well, thanks for asking that perfectly set up question. Snowflake is a data company, and data is fundamental to how modern businesses work. The more and better data you have, the easier you can predict customer trends, make strategic decisions, or even just optimize the customer experience. The problem is traditional tools for handling data just aren't built to handle digital businesses. One of the more successful traditional ways of handling large amounts of data is data warehouses, which were essentially literal warehouses full of very well-structured data that you could run analytics on. This then evolved into data lakes, which were basically large pools of unstructured data which you could try to extract analytics from. With modern businesses ingesting data from customer transactions, Internet of Things, mobile devices, these traditional data warehouses and data lakes can become too costly and complex to operate efficiently. Now, these solutions have improved recently with the shift to the cloud, where large customers like Amazon, Microsoft, and Google can handle all the actual hardware for you, and all you have to do is manage the data yourself. This gives an order of magnitude less complexity while also offering cost savings on traditional methods. But Snowflake takes this one step farther, offering a one-stop shop where you can have a single platform that will manage your data automatically on cloud servers. Snowflake offers a solution for data warehousing, data lakes, data engineering, data science, data application development, and for securely sharing and consuming shared data, and they do it all as a service. This means that there is an additional order of magnitude less complexity, because Snowflake can handle essentially an infinite amount of data, and you just pay for it as a service. Companies don't need to worry about what kind of database they need to set up, changing around schemas in their databases, deciding how many people can connect to a database at one time, how they can migrate data from one part of the business to the other. This is such a valuable service that Forrester estimated in their total economic impact of Snowflake that customers see an ROI of 621%. Now granted, that study was actually paid for by Snowflake, so you would expect them to have pretty positive results, but still, that kind of return on investment is a no-brainer. If I could put my money into something that would make me 7 times back what I put in, you can bet that I would be using it. Additionally, Snowflake is built on top of Amazon Web Services, meaning that they don't have any actual hardware that they own and have to operate. And since they use AWS's S3 service, they can guarantee 99.99999 with 11/9% durability of the data. To put this into perspective, if you had 10 million objects of data being stored in S3, over 10,000 years, you would expect to lose 1 piece of data. Now that's just the story, and it's easy for a company to tell a good story, but it's much harder for them to back it up with numbers. Let's now look at Snowflake's recent earnings to see if their numbers back all the technology hype. Hey, a quick disclaimer here. While I was editing this video, I realized that I kept referring to Snowflake's Q3 2021 earnings as their Q4 2020 earnings. Even though these earnings only go back to the end of 2020, Snowflake calls that the third quarter of their fiscal year 2021. So every time I say Q4 2020, just think Q3 2021. So looking at their most recent earnings report from Q4 of 2020, here are some highlights. Snowflake's revenue in Q4 was $159.6 million, an increase of 119% year over year. Perhaps more importantly, their product revenue was $148.5 million, an increase of 115% year over year. Now the reason I say that this number is more important is because of what leadership said during their most recent earnings call. Basically, product revenue represents discretionary customer spending. They're not locked into a long-term contract which guarantees the amount of revenue that Snowflake is going to get. Instead, customers pay for what they use on Snowflake's platform. So more spending indicates that they're getting more value out of the platform. Seeing this grow 115% while a lot of companies were facing an economic downturn is absolutely a positive signal for the company. Their adjusted gross margin was 70%, which is pretty par for the course for a lot of these cloud-native companies. Their dollar-based net retention rate was 162%. This means that this year, customers spent $1.62 for every $1 they spent last year. That represents 62% growth without even having to acquire any new customers. In fact, in the Dresner Advisory Services ADI report, which surveys customer satisfaction, 100% of Snowflake's customers said that they would recommend it to another organization. And that was for the fourth straight year in a row. Their total customer count is now up to 3,554, and their customers spending over $1 million per year on the platform has reached 65. That's an increase of 110% year over year. They also have a healthy cash position at $5.1 billion, as well as remaining performance obligations of $928 million. Those RPOs basically represent the sum of their backlog as well as their deferred revenue. So their products are good, their earnings are good, and thanks to the recent drop in the stock price, their value is starting to look okay. But what about competition? Well, if you've seen any of my recent videos, you may think that Datadog is a competitor since both companies offer data services. In reality, Datadog is actually complementary to Snowflake. In fact, they offer integrations onto Snowflake's platform. Looking at Gartner, the biggest competitors listed for Snowflake are the large cloud providers, so Amazon Web Services, Microsoft Azure, and Google Cloud Platform. While these are definitely competitors because you could theoretically build a platform just like Snowflake on top of these, in reality, you would need a whole team of engineers who really know what they're doing to replicate this performance, and so that's going to be an order of magnitude more complexity and cost for you to do by yourself. We will want to watch these companies though, because they do have the resources to replicate Snowflake on their own, and in the future they may offer a service very similar to Snowflake if they want to compete in this area. Perhaps a more direct competitor with Snowflake is Cloudera, which was a very early entrant into the big data market. Cloudera is definitely a trusted data service provider, but while they're currently grappling with balancing their legacy customers with the shift to the cloud, Snowflake doesn't have any of that baggage. With its cloud-native infrastructure and near infinite scalability, Snowflake is several steps ahead of Cloudera in the cloud market. The real competitor here may be a much less well-known, not yet public company, but one that has some very large backers, with Amazon, Alphabet, and Salesforce all investing in the company. That company is Databricks. Now, I won't get into all the technical details here, but basically there is some debate on whether or not Databricks may actually be a better solution than Snowflake, being much cheaper than Snowflake when it comes to structured data, but while also using Spark rather than SQL, which is a little bit more niche, and so normal business analysts might not be able to use it as easily. Now, obviously, it's not yet clear which of these technologies will win out in the long term, but I think it's important to keep an eye on Databricks, especially over the next several years when they may be going public soon. So what do I personally think of Snowflake, and what will I be doing with my money? Well, I don't think it's hard to tell that I like the company, and I think that it's going to continue to grow rapidly at scale. I also think that they are miles ahead of the competition at this point, and that they have at least a year or two of runway before competitors really start catching up. Actually, in my opinion, the biggest threat to Snowflake is hype. All investors can easily see the value in Snowflake. That's why its price doubled during its IPO. The problem is, this makes the stock expensive. Like, its price to sales ratio hasn't dropped below 200 since its IPO expensive. That being said, as I'm filming this video, Snowflake's price is at $265 a share. So yes, the stock price probably will continue to drop for a while, but with the company more than doubling their revenue even during an economic downturn like we saw in 2020, I have a lot of faith in this company being able to outgrow its ridiculous price. So I personally have opened up a position of around 10% of my stock portfolio into Snowflake, which I funded partly by selling my shares in Alteryx as well as by adding some new money into the account. Now this is a long-term play since I do think that the stock is overvalued at its current price. The thing is, I don't know if there's going to be a better entry point between now and when Snowflake really comes into its own. So let me know what you think of Snowflake in the comments. Don't forget to like and subscribe if you enjoyed this video, and I'll see you next time.